Hey, what's happening, guys? Dan Darrow here with the first Options to Play video update of 2019. So, hope you guys all had a fantastic New Year's. Great holiday week, right? Nice, relaxing vacation if you took the time off. If you didn't, well, uh, you probably would have been trading what has ended up being one of like the crazier weeks in between Christmas and New Year's in recent memory. After a lot of people getting nervous and thinking we're gonna get a lump of coal this Christmas, actually the Santa Claus rally ended up materializing, right? And really, what what that did was it helped break up some really fantastically oversold charts, right? Down 8, 9, 10 days in a row in some cases. So this is the XLK, which I'll get into in a second, right? But you can see just really sharp slide and finally got the bounce. So worked off those oversold conditions. But more importantly, and really what the focus of this video is on, is this bounce now has created what I love in terms of like swing trades and how I find a lot of swing trades. It's created the ability to really spot relative strength and relative weakness. So what I mean is when you get these major market moves, in this case, obviously it was down, but if you flipped it and say like we had like a significant rally, right? When you get these huge moves in unison and the whole market tends to move together, then what you're watching is the first counter trend move. So in this case, right, it was down and then we got the bounce, right? So you had a big move down and then finally a bounce. Now, once you finally get the bounce across the market, right? Now what you can do is you can go screening, across different sectors, within sectors, maybe individual names that you're looking at, and you can really start to see which names bounce back sharper, right? Which names are still above moving averages, which names held key support levels, and then which names haven't. So which names have had shallow bounces, which names have struggled to even bounce at all, which names are still stuck underneath moving averages, right? So what you want to do is like you could use the S&P or the Qs. If you're looking more specific in certain sectors, say like tech, so that's why I have the tech up here. Then you could really use these sector ETFs as kind of like benchmarks to see what or how your names have fared, right? So what I am looking at, and what's going to be going out as a trade idea for tonight is software stock. So XLK, right? You can see sharp move down, bounce, just getting back to the 8 EMA, right? Now, even within the software space, so there's not a specific ETF for it, but within the software space, if I did comparisons, right? So say let's use Salesforce. That's a big one. So you can see that Salesforce has bounced back a little bit. So it never really broke the November low. So that's a great sign, right? So it dropped, hit right around the November low and snapped back pretty sharply, right? Versus XLK, which obviously is going well below it, and it's bounced and stuck underneath it, right? So that's a good sign. Now, if you just compare just by actual software names, right, there's a pretty big separation. Like, so this is MongoDB. So you saw what Salesforce did, right? MongoDB basically didn't really even get down into that area. So it dropped, but in terms of retesting November low, it wasn't quite there. And not only that, but this one is just off of its 52-week high. So it's only retreated about 10-15% off its 52-week high, whereas the XLK is down. It was down pretty sharply, and this is still hanging out around near the high, right? So I mean, if you want to go in, so if we just get rid of this and we go into the actual chart. So let's just go into the chart. You can see, I mean, look at MongoDB, right? Didn't come down to the November low. Basically is held above most of its major moving averages, right? Only now underneath the 8 and the 20-day, but it's above above the 50, above the 100, and above the 200, and just a really fantastic looking relative strong stock. You compare it to tech, even versus software, right? So you can see like Salesforce has bounced, but at the same time, it's still below its 200-day, it's below its 100-day, it's well off its 52-week high, right? Versus MongoDB, which is off its 52-week high, but only much more marginally, right? And it's not just MongoDB. I mean, there's other ones. I was looking at Twilio, right? Similar setup. Okta could be another name you look at. Not a bad setup. A little bit different than Twilio and MongoDB, but still, relatively strong name above most of its near-term moving averages, right? So this is what I love. And like now, what you do with these, like what you assume is like stocks that hung in well during that really ugly move in December, right? Let's go back to MongoDB. So stocks that hung in well during that really ugly move, like these are the names that theoretically should be the go-to names that people come into once we start to rebound, right? They held support. They're still in the trends. They only have near-term moving average resistance. Maybe some of them might not even have that much moving average resistance above. So it's when the market firms up or rallies, like these are the names that you would expect to turn higher faster because they held critical support, they held trends, and they don't have as much resistance on the upside. So that's why you could use this same thing. So I talked about relative strength here, but you could talk about relative weakness, right? Apple, right? A name that has struggled to really reclaim any. Let's get rid of this. So any like major areas of support, right? It's getting ticking through the 8 EMA, but still well underneath the November low, well underneath the 20-day. I mean, it has a lot of room to get back up and really start to reestablish any sort of momentum higher, right? And that's why I say like the relative strength, the relative weakness is really easy to spot now because you've had a major move in the market and a bounce, so a counter trend bounce now, and now you can see basically. It's like when the old saying, like when the water goes out, you can see, who has a hole in the hull and who doesn't. So now you can see like where the money's been, where the strength lies, and then you can formulate swing trades, long and short, off of that. So that's why like not only was this bounce the last week great because it worked off the oversold conditions, but now it also helps you spot some good setups for swing trades. Cool. So, first video 2019. It's gonna be a great year. I know it. Volatility has been so elevated. I mean, today, the first day of the year, had almost a 2% gap down, and now we've pushed back green. So, I mean, 2019 starting off just about how 2018 wrapped up. So, expect a pretty volatile January. Listen, as always, I'd love to hear from you guys. So, questions, comments, pass them along. It's going to start prepping for JP Morgan Healthcare Conference, so I'll try to get a video together and get that out ahead of the start of that conference, just so you guys can kind of get a feel for what I'm looking at and maybe what some of the potential big movers are going to be. That's always like a huge trading event, a lot of stuff going on, a lot of guidance, drug data, deals. So I'm trying to do a video just specifically for that. So keep an eye out for that. Have a fantastic night, and I'll talk to you guys tomorrow.